just a few minutes after 12 o'clock Eastern. And we are here again for another edition of Chart the Markets. And I want to thank the Fed Token crew and smartdefi.com for their support, because without it, we wouldn't be doing these things. And I also want to thank our friends at BYDFi Exchange or BYDFi Exchange, who also list FEG if you're interested in buying it, for their support, because they offer up a couple trading bonuses every session. So again, today we will be offering two $50 trading bonuses. All you have to do is be signed up under the Blunthouse TA link, which is available at, on YouTube in our description at Blunthouse TA. Or if you want to use the code is K5Z4, T as in Tom, P as in Peter. Now, here's what I wanted to talk about today. And it's going to sound boring at first, but it's actually simple preparation. One of the things that's kind of good about having the other Telegram group is that, you know, people come in and they talk about what their experiences are. And quite often they're things that we coach about all the time. Well, one of the things I'm noticing is that when it comes to the learning sessions that we do, whether it be in our Telegram group or even in here, people are paying attention, and that's great. And they're excited, also great. And they get back to their desks and their screens, and then they rush into trades. And I get the excitement of wanting to apply what we learn, but sometimes we get so excited that we often forget to do the little things that are very, very, very meaningful. One of them is planning our trades, preparing for our trades. And that will look different for different traders over time, and that's okay. We all have different methodologies, and that's fine. But let's just start with the simple things. When we sit down at our desks, what is it that we're going to be doing? What time frame are we going to be trading? The 1 hour, the 4 hour? Are you going to be sitting there scalping at short time frames? All of that's important. Because before we make a trade, as we've talked about many times before, we want to know where we might be jumping off, right? Do we have targets set to get in and out of trades? And in doing that, by the way, you're going to take a lot of anxiety out of your trading, because you'll have a predetermined entry that you want to hit, and then you'll have a predetermined target that you want to hit. And the job becomes managing what happens in between those 2 points. Not always do we hit our targets. We still might be green, but we didn't hit our target. But we have to manage those situations, and the best way to do that is to have a little bit of understanding before we enter the trade. And what I would like to see people do just a little bit more, and I guess maybe we're talking about not rushing things, being patient, that's all part of it. But sit down and think again, what time frame am I going to trade? Am I going to trade the 15-minute? Okay, then I'm going to trade the 15-minute.
Sorry, Blunt,
Yeah.
One moment. I'm just literally about 10 minutes away from home. Unfortunately, my phone's on 5%.
That's okay.
So I'm going to have to jump off real quick. But as soon as I get in, I'll jump online.
No problem.
Yeah. Anything I miss out, just when you see me online, just do a quick catch up for me if that's all
no
right.
worries. You can jump in and out anytime.
All right, sweet. All right, guys, I'll see you guys in about 10 minutes. Apologies for the disruption there.
No worries.
All right, guys, see you in a bit. Bye-bye.
So if we're looking at this 15-minute chart, that's the time frame we want to trade. What else should we be looking at? We should be looking behind us at a 5-minute, We don't want to start looking at things much shorter than that because it's far too noisy. But we want to start to look for areas of opportunity, entries, exits. Is price ranging between a particular level? On this Bitcoin chart, what do we notice? We notice that it's ranging between the upper and lower value ranges of the volume profile. How about that? So we have a little bit of a trading range, although this is, let's be honest, this is consolidation of some sort on this time frame. But at least we have a trading range now. And if we were to look further out from our 15-minute, let's say the 1 hour, what do we learn? We learn on our 1 hour that what we see up here is essentially a premium on this time frame. This is the upper value range of the volume profile. This gray area is very light trading. But price will perform and react the same way when it sees these volume gaps in this gray shaded area than it does when it's in the blue area. It just might happen more intensely. So what I learn here is, okay, we're bullish, I get it, but we are trading at a premium on the 1 hour. Just take a look ahead. What does that leave us on the 4 hour? Right at the upper value range on the volume profile. So this is obviously, this is a key level of support and resistance, and this is shaping up to be a key level of support and resistance. This is a very organized move. When you look at it kind of on the 4 hour, it's like it's a staircase up. Staircase, flat, staircase, flat, staircase, flat, staircase up. So either we do a little more consolidation at this level to determine whether or not we want to take the next run up, or maybe we pull back. But now we know at least where our ranges are. And that's important to us because, hey, if you break out here, probably going to go on a run. But if you break down, yeah, the draw for price is pretty significant to the downside. So now that we've done some time frames, we're going to throw on some major moving averages. This is the 15-minute, and we're looking at Bitcoin. Trading in this gray area, which always, makes me be very cautious. And here's your 20 on the 1 hour. So if price pulls back, where will it likely pull back to? Probably the 20, for lots of different reasons, right? You can see that it creates a bit of an M, you have a leg up, retracement down kind of creates a center channel, and from there you pop higher and you create two equal levels of price, or nearly equal levels of price. And what happens when we get there? That's where psychology kicks in, right? Wouldn't matter if this was a daily, a 5-minute, or a 15-minute. What's happening when we reach these areas on that second top is quite often the people that didn't exit at the first one are going, yeah, you know what? Maybe I should take some off and create selling pressure on the way down. It doesn't mean that a trend is broken or anything like that necessarily. It just means that you're going to get a couple red candles in what still appears to be an uptrend. But if we pull back, we're pulling back to the 20 on this time frame, which is 110.5. Then we start to reverse. Let's look at the 15-minute. Where's 110.5? Right here. This level that I'm at. And what would we call this level? If we had to identify it as being anything, it's somewhat structural. So that would be relevant. This is why we do multiple time frame analysis. On the way back, this level will be critical for support and resistance at around 110.5. And is all we're doing is we're picking up where you have kind of benches of past price here, and then just averaging these bottoms. You don't. It's not pin the tail on the donkey. It doesn't have to. You don't have to be perfect. Right? You just need to be close. And what just happened on this 15-minute time frame? You know how we show on the retraces where you take out the previous wave's low on the way down? Well, here's an example where you take out the previous wave's high. This one. Break one level, find the next. That's what it's going to look for. And so on, and so on, and so on. And as far as what it's looking for to the upside, well, you're pretty much into pure, price exploration at this point. Right? Because you're basically at all-time highs. This is the 12-hour, which some people say is the true daily, because we're trading 24 hours a day. But if you pull back on the 12-hour, that's looks pretty significant, doesn't it? It's basically saying that all this is a premium. If you look at the daily, everything above 104.6 or 104.5 showing up as a premium. So at some point in time, someone has to determine whether or not they want to cross the gym floor to ask somebody to dance. Do they want to go push new highs where everybody can see them only to get shot down? We're going to find out. Right? We've been saying for weeks that whether or not we believe this is justified on where price is going or has gone, the reality is that very early on, back in April, we got a very clear buy signal. And ever since then, this chart has told us nothing but up. And what we think, what we believe, what we think we believe doesn't matter. The only thing that matters is the price on the chart. So if you're not listening, if you're listening to people and not price, that's a problem. We're interested in what money does, not what people say. Now, do I personally think this run is justified? Not really. I'd like to see, some sort of a reasonable retracement. It hasn't happened yet. However, that doesn't get in the way of the basic ability to see that these two lines are separated. That's all I need to know that this is still a bullish trend. It's as simple as complicated as that. But what we find out when we do the advanced planning is, because you took the time to look forward and backwards, you're not going to be surprised by as much. You'll find that you'll be in the driver's seat earlier, which will allow you to manage your trade better with a lot less stress. Isn't that what we really want to do? And all you had to know, and again, this could be any time frame that you're trading, but this daily chart has said stay in the trade since April, and it still tells us that. Is all you had to do was listen to it. This, what the market tells us, is all we need to know. And you guys know, I get into this all the time with other people. They, pay more attention to the fundamentals. The fundamentals of what? The fundamentals of money, the stuff that drives everything, the cog in the wheel, the fuel in the engine, is here. Right? And we talked about it in the last session about the pontification that goes on, the navel gazing about this is what's going to happen with the economy, this is what's going to happen with unemployment, this is what's going to happen with interest rates, this is what's going to happen with tariffs. Can you honestly digest any of that stuff and then apply it to your trading? Probably not. Because it's just noise. It's just noise. We're here to monetize the chart, not someone's opinion. And it doesn't matter who it is. Do we respect those opinions? Sure, of course. Are we ignorant to them? No. But do their opinions drive what happens on this chart? Absolutely not. I only be concerned about one thing: the price. Not what people are saying. It's what money's doing. And when you prepare in advance and you realize that, hey, even if it was back here, right? Please don't think that because you missed the first few candles, oh darn it, I missed it, it's over, I might as well wait for the next opportunity. Well, maybe that was your opportunity. Like, we don't want to think about it when it happens like this, and then the whole time you're still feeling like, oh no, I already missed it, just more. That's because we're thinking too much. I'm guilty of it too. That's why I made this. So I have to think less. You would have known back in here that this was some sort of a move up. Do you have any idea that it's going to run like that? No, you don't. But once you're in it, and you're in it early enough, you have the opportunity to manage the trade. And guess what? When you're in early and making money, I promise you, you're going to be listening to other people less, because you're going to feel there's no need. One of the reasons people feel there's need to listen to others who may or may not know what they're talking about is because they feel they need to. You don't need to. You just need to learn how to read price on a chart. That will change your situation. It's not really hard, right? There's no crystal ball involved. You don't have to read tarot cards, no tea leaves, no palms, nothing. It's simply a language that you have to interpret and learn. No matter what we believe on how justified a move is, our bias can't get in the way of what the chart tells us, because the chart is right, not the bias, or not what we believe. You would have been in this trade early, and you would have been able to manage the shorter time frames more effectively, because you would have been looking at this daily, understanding that while there were red candles, they were just simply red candles in an uptrend. Nothing goes straight up or down. They were just red candles in an uptrend. Price traded on the north side of these levels. We paid a little bit of insurance to get a safe entry. And the script tells us when that is. So all the daily drama, the intraday drama of wicks and price spikes and all of that kind of stuff is really irrelevant. If you learn how to read price on a chart and you take every trade from the position of preparedness. Because part of this is about making you have less risk and be more successful. Being prepared is part of mitigating risk. Sitting down at our desks when we get home from work and, turning on a 5-minute chart, that's not preparedness. That's just, I'm excited to be home and doing something I like to do. What's for dinner? That's all that is. Right? And that's why we talk about treat it like a profession. Treat it like a job, or schooling. But just treat it like a professional. Right? And it will reciprocate. So if you take the time to just prepare a little bit more before we make the trades, everything in between will become less manic. And I think everybody knows what I'm talking about. Oh, I use too much leverage. I have no wiggle room. What do I do? It's all over. Trade's killed, or you got liquidated, whatever the case may be. It happens. That's why. Do the work in advance, and all that stuff becomes less likely and less probable. Right? Look forward and look backward. And if you're looking forward and you're looking backward, what you will see is that these moves here will become much more prominent in your trading, regardless of the time frame that you're trading. Right? We have no idea what comes after the candle that we're looking at. And I know sometimes we're looking at charts from a macro vantage point where everything's played out already. That's not our luxury, is it? Our reality is that we have to look at the right side of the chart. That's what we're looking at. In order to understand where price may go on the right side, though, we need to know where it's been on the left side. Don't ever forget that, because current price revisits past. But if on this daily chart, if this is all we were going off of, it's a buy signal. Take it, right? Don't be afraid. The only reason that there's fear in taking the trades that you want to take is because perhaps the risk to the downside hasn't been addressed, and you don't want to lose money. For whatever reason, there's anxiety about it. If this was a trade we were going to enter, and let's assume that we entered in one of these candles or this candle, but what I want to show you is this level. Right? So depending on where you get in on this candle will determine where you put your stop. But what I do want to show you is that the level between these two candles being equal or nearly equal is a good point to assume that if you were to break that, that would invalidate your trade to the upside. Right? That's what that would mean. Now, why else would there be anxiety? Because there's too much leverage. Because if you use too much leverage and your liquidation level is a blink away from where price currently is, well, that's an impossible trade to manage. You can't put a stop in. It's just, or you get eaten up by fees. So dial the stuff down. You don't have to use as much. You're not going to care whether you used 10 or 20x on Bitcoin if it does this, right? You're not going to care because you're going to be more than happy with the trade that you were in. You'll be miserable, though, if you get washed out of it early. So don't get washed out of it early. Don't do it. And you know how you get washed out early. It's by taking unnecessary risk, right? We think we're in the right neighborhood, but oh no, you know what? It's reversing as soon as I place my order. And then you realize after the fact that you didn't look at the 15-minute, just for example. And you're like, damn, if I would have saw the 15-minute, I probably wouldn't have made that trade. That is the lack of preparation that we're talking about. Simply that. Take the time, exhale, and plot out the forward look and the backward look. And start by trying to identify the risk on the chart first. And if you, just looking at SPX, if you're up here, this is a 15-minute, and this is the S&P 500. Just going to click the 20, which is green, the 50, which is blue, and the 200 is red. Right? When you're trading above the 20, the 50, and the 200, just like you would have been here, right? You have to be aware that at some point in time, price is going to want to come back and tag that level. Doesn't like to be, and you can see it on all your charts, it happens continuously. And sometimes it's a continuation. Sometimes it's not. Right? But when you're up here, what's the risk on the chart? The risk on the chart is retracing to the 20, not holding it, retracing to the 50. If you don't hold that, well, we know that's the point of control. That's the lower value range, and that's the 200. And when you look at where the volume profile sits, you can even see that this trading up here was the premium that we talk about. So if I was talking about this being a premium here, nobody was going to listen to me. No one's listening to me when I'm talking about price being a premium at that point. They only start listening here once it rolls over. When you trade in these levels, things can happen, and they can happen quick. You break the upper value range and that gap comes into play again. And what's a draw for price? The point of control. Buyers and sellers coming back to shake hands. It's a comfortable place for price to go. In this case, though, we broke a lot, didn't we? Right? You break the 20, you break the 50, you break the 200. And you broke the 200 like it wasn't even there on this time frame, and that's not good. But it comes back to areas that you can anticipate. But you can't anticipate them if you haven't taken the time to look. And if you're trading futures, if you're trading crypto with any sort of margin, because the drawdowns in crypto are typically, I don't know, 40 to 60 times, I think, from what I read, to what they are in the stock market. And in other words, the velocity of the moves up and down are extreme, and I think anyone who's traded this stuff knows that. But take the time to sit down, determine what you want to trade on the time frame that you're considering trading at, and look forward and look backward. This becomes more effective when you have less symbols that you're monitoring, which comes back to what we've talked about before. Instead of following 10, 15, 20, or 50 symbols, which I know some people do, work with 5 and get to know those 5 very well. And you will become more comfortable trading those with less outside noise of the 46 other symbols that you were trying to trade or monitoring. Find something that feels good when you look at the chart and get comfortable with it. In addition to that, add one thing. I look for time frames where price is in or around the 50 MA, right? Because the 50 SMA for me, just like the 200 is key, but the 50 I find is quite critical. And there's data that I have that shows moves off the 50 SMA outside of a certain range within the momentum bands that I use have a 98% success rate. So stuff like that gets my attention. Whether it's 98% or 90%, I'm still interested. So, but you can see why, right? So I like to buy at the 50 or I'll short at the 50. Why do you short at the 50? Because that's the ice, right? That's why it's light blue. It's the color of ice, and you fall through the ice, it's kind of hard to get above the ice again. It takes a lot of effort and a lot of money to move price above again. And you can see on this time frame, and this would have been perfect for traders, right? You're hitting your head on a very obvious level, right? Yeah, you kiss the 20, interestingly enough, but all of the contact is essentially with the 50, right? And then you get the breakdown right in here. And then it's just a series of tests and failures. This will probably roll, take out this low. If it bounces, so that's the risk, right? Fail here, take out the previous wave's low, and then you're looking for different time frames to see what you might find on those other time frames as targets. And that's how you're managing the trade, along with determining whether or not, you're working off good sell signals with a trend still intact. So on this 15-minute chart, and we show this almost every week, and it's not even intentional, it just shows up and shows up and shows up again. Big move down. This is your first attempt to go higher. Our good friend Carp that was in here, Carpathia, the first mouse, give him credit for this, the first mouse gets the squeeze, the second mouse gets the cheese. Let's say this guy's our first mouse. And the squeeze is he fails. And when he fails, he takes out the previous wave's low. There's a higher probability of the next mouse being successful. But we will go through the same process to determine whether or not that will happen, right? We still have to analyze things. But if this rolls over, it takes out the previous wave's low. If it bounces off the 20, which would this be the first touch of it? If it hit it, yes. So it could bounce, and then you start looking up for levels. The lower value range is an obvious level because on the right side of our chart, if you can, this is all that gray trading that's kind of light, so if you have momentum higher, it will push up quicker just like it falls through it quicker. But if you get up into this little gap here, it takes you to the lower value level pretty quickly. Still essentially in a gap, and then you've got the point of control here, which represents another shelf, which would be a draw for price. And what else is up in that neighborhood? The 50 MA. And time and price will come together as this unfolds, and maybe the 50 somewhere around here, but that's why it's a target. It's not pin the tail on the donkey. It's just, we just have to be close. We want to make sure that our trades get executed. And if we're trying to hit pennies all the time, the likelihood of that happening is pretty slim. Don't worry about the pennies. Count the dollars. This is not a business where you can be overly worried about the pennies when you're a private trader, right? Take your money when it's there. Take it when it's at reasonable levels. So the mistake some people would make, and let's use this same chart as an example. So here's our entry signal. We have the 20, the 50, and the 200. There will be many that will instantly shoot for the 200. Right, let's hit the top of the glass. Fill it right to the rim. The problem is that if you don't understand that this is going to be the first touch since this level broke. You breached it. This is the first touch. First touches typically fail. This isn't a daily, this is a 15 minutes, so there's not a ton of time to recover. But you're going to shoot for the 200, forgetting or not understanding that first contact with the 50 will likely fail, and all of a sudden you're stressed out. Why? Because you didn't do the prep work to see what you could be encountering in your trade. I don't know. The thing looks allergic to the 50-day moving average on this time frame, and I don't think Clairton's going to help it. Right? So, bang, bang, bang. It'll hit it again. Probably encounter the same thing, especially up at the point of control in this shelf. It takes a lot to get through these, if you haven't noticed. So if you're trading this, or trading under the methodology of working in and out, or on and off the shelves and into the gaps with confirmed trend, you'll notice from time to time that when you encounter a shelf, and let's say you want to push through it to the upside, it takes a while, right, to break through it. Not often do you just blast through like dynamite. Sometimes it's because you got to chew up all the past price. You got to work through all of this stuff, right? Just like these big lofty shots higher create gaps that cut through like a hot knife through butter on a retrace. Well, the consolidated areas take time to move through for that very opposite reason. So don't be alarmed. As long as you still have trend confirmation, you may still encounter, and I think if we go to maybe the Bitcoin daily, I can't quite remember which one it was. This thing's just bullish as crazy.
That thing looking beastly as fuck. Not gonna lie.
No, and when you look at your weekly Bitcoin, like you're into pure price exploration now, and I can assure you that somewhere somebody's doing this. They're probably taking this trend line and they're going like this. You know what I mean? And then they're going to shrink their chart down, and rightly or wrongly, that's what they'll follow. And there may or may not be some truth to it. We don't know. It's just a cheap and cheery trend line, but I'll leave it here. Let's see what happens to it. Should probably fix it if we're going to leave it here. Close enough. You can obviously see that this level is double toppy.
Yeah.
Right? So
is that what
to see where this goes.
What time frame are you looking at?
That's a weekly, right? So
okay,
that's how we're doing. So we're just kind of talking about the preparation part, right? And a lot of it's just we hurry home from work, or you have 5 minutes alone without the kids in your ear, because all you want to do is sit down and make a trade and get lost in your charts. I get all that, right? Before you make the trade, though, get lost in the preparation a little bit, right? And I think people will find that the outcomes will be a little bit better, and certainly more consistent, right? Certainly more consistent.
I agree with you on that, because I like to do my preparations on the Sunday evening before market opens, and I've found that a lot of the trades that I just mark up on TradingView do play out throughout the week. Mm-hmm. My only issue is just, it's not even like my trading strategy, it's just my psychology, because I see like it's working, but whenever I get like little retracements, for some reason I still have that little bit of fear, and it makes me jump out of trades at a loss. Some of the biggest ones I've won is where I've just, entered it and I've just left it because I was like, you know what, you need to trust the process because you've seen it's worked on this many.
Hmm.
So just believe in your strategy
Yeah,
works. And yeah.
it's
But yeah, you're
it's
100% right. Preparation
trusting
is key.
trusting your charts um, is something that will take time, and I will acknowledge that. And even still, you'll see something and you'll say, "Man, that just can't be. That's too much of a spread. That's a huge drop, or that's a huge shot to the upside." Right? And it it has to feel like, remember a few weeks ago when Ben June was here, we were talking about how you want your trading to become instinctive, and as soon as you see something, you know it's not right, and you cut the trade, as opposed to waiting and so on and so forth. So that instinctive part of your trading is a sign that you're taking the baby steps. Once you've taken those baby steps, though, and you start looking at practical charts, and what I'm showing you is United Health's weekly, because I was asked in my Discord where I thought this was going. And I mean up here, where I thought this was going. And my number for this thing was 268.54. What's this? Blew through it on a wick. Right here. And now that I come back, I look at the chart again and I'm like, what does it really want? I think it wants this. See? I don't care what anybody says or how far away that is. It's $100 away. I don't care. Did I hurt your feelings? You own this? You're not short? Well then, tough for you. This is not we're not here to make friends with people that don't own or don't trade. Right? This is just what we see. Right? This for me, 268.50, whatever, was a simple process of, hey, well, there's a bench, it lines up with this, lines up here, well, kind of cuts into these bottoms too and averages that stuff out. That's enough for me. Let me drop a level in there. Boom. Why do I do that? Because this kind of stuff happens. Is it logical? No. Right? Is it logical to go from 600 to 300 in a few weeks? Nah, it doesn't feel very rational. But it is what it is. It's not my job to figure that stuff out. I don't care why. It makes no difference to me at all. Here's all I know. This is your upper value range. Price doesn't like it. Given several opportunities to go short, but let's just for a second look at what we would be looking at on the weekly chart. There we go. Let's flick this on. Part of this battle is being at the right place at the right time. But half the time, we don't know when that is. That's what the scripting helps us with. Right? There are some parameters in technical readings that have traditionally told me when the market changes. I've learned over time that the ones I'm interested in are larger breakouts and breakdowns, not so much the choppy stuff. But do we not get a real clear sell signal at a top? Yeah, we do. We don't know, however, what comes next. But what do we know? Historically, time and time again, we see certain things. What do we see here? Point your eye out with a short-term average, which usually indicates a change in direction, like maybe this one did in the center of your screen. That was indicating a change in direction. this was also indicating a change in direction. So that's all I can see is my sell signal giving me a flash. I can see the point, which is a reversal signal, as simple as that may seem. And I can see the divergence, and this is a weekly chart. And I can see the divergence in those two levels. And then what happens? It just lets go. But now that I'm in it, and again, this could be a 10-minute chart, a 5-minute chart, we're happening to be looking at the weekly. Right? Clear signals to go short. This is not that hard. Divergence was there to reassure us. We did not know that this candle would look like this, however, or that we would continue to fall. But what we do know, this means stay in the trade. The fact that price is trading on the south side of these levels means stay in the trade. You wick the T line on the weekly and pull back. Have we seen this a million times before? So we have an impulse down, and then what happens? Instead of snapping back to test, in this case we go sideways. Now, I'm reinforcing a point here. This is, again, a weekly chart, could be any time frame. Is there anything wrong with taking that trade? Nah, not really. It's a $20 move, though. It's really not a big deal. But what is the most important thing that I see on this chart? I have a big move down, sideways move that tests these levels but fails and continues to fail and actually closes below the 5 EMA. What is the message there? The message is that my trend down is still intact, and these are just 3 breathing candles. That's all they are. Right? That's all they are. They are just 3 green little candles in a downtrend. This is still in a downtrend. So when someone on Twitter says, "Oh, I don't know I don't think it's in a downtrend anymore." Oh, bullshit. Shut up. It's in a downtrend, for crying out loud. And I'll be the first one to acknowledge what's in an uptrend. But this is easy as Sesame Street. Like, for those guys, I really want to blow these candles up really big, because they have no clue what they're talking about. If they can't read price on a chart, they shouldn't be talking about how to handle your money. And this isn't financial advice. This is just teaching you how to protect yourself. That's what this is about. No one's going to look after you better than you, ever. Unless you need a brain surgeon. That's not going to work for you. But this thing... So, I think we're recovering from here, and that was the low. You think so? What happened here, guys? Oh, we took out the previous wave's low. And guess what? You're still in a downtrend until the chart tells you you're not. That's it. You want to look at another time frame? Look at another time frame. But this thing's a mess. Here's the 4-hour. That's 1,000 days. Let me take that off. Right? Just do what you're told. And when you hit the runners, you'll hit the runners. Simple, simple things. This candle here. That little doji. After this big impulse expression higher. While you already had a stochastic RSI, because that's the one that typically goes first for us, right? The stochastic RSI, followed by the Fisher transform, which is really great for trend, and then our MACD. Like, come on. Like, this oversold, right? Wickedly oversold. The chart was telling you right here that something was up. Script went off 2 days later, basically at the same time that the Fisher rolled over. And then the following day, the MACD does too. Like, meanwhile, when you look at your chart, tell me something. Do you see any candles above the T line here on this daily chart? No. Do you see increasing momentum down with divergence? Yes. Like, you don't have to go to MIT to figure this out. You just have to have the right tools to figure it out. And one of those tools is blocking out people telling you that you don't have the tools to do it. Because you do. Each and every one of you. No matter how insane you might feel when you look at a chart, when you get good and you're like, wow, that doesn't look reasonable to me. But lo and behold, it is. Because price doesn't care about what happened to get to a certain place, right? Whether price was too hot and it overshot, and then the pullback becomes nasty. That's what you should expect. So why should we be concerned about the major markets right now? Well, because for 15 years, someone's been pumping fairy dust and air into the market. That fairy dust and air is money, right? What makes price go up? More money. What happens when that more money, it becomes less money? Makes it harder for price to go up. That's all. So when we talk about levels, because really, that's what we're doing. We're talking about levels. And I'm sorry if this looks a little busy. But this chart of oil, again, 61.66 was the number. Well, here we are again. Today we're at 61.16. And this monthly chart would show that we've been here at this level, bouncing around for a while. So the target was correct. It was a real number, a real level. But I have, 4 more here that I pulled up, the very same methodology that this one was drawn. Current price revisits past. Fail one level, find the next. If remember when you're a kid and there's somebody chasing you and you're scared, where do you run to? You run to places that you know. You ran home, you ran to a neighbor's house, you ran to your friend's house, you ran to your grandma's house. When price is on the run and scared, it's going to a place that it knows. This is a place that it spent a little bit of time. That's why I highlighted it in gold. More importantly, however, that $51 level is pretty interesting. Look what it's picking up, right? It picks up this little bench in here, and all we're doing is finding areas where we can level off tops and bottoms to show support and resistance. Through here, in through here. Kind of averaging these wicks and these candles in here. Right? Again, does not pin the tail on the donkey, it's just getting us close. This is a real number. Does anybody want to talk about it? Absolutely not. Absolutely not. Now, if you really want to think, man, something sounds absolutely nuts, I'm just going to use another chart of oil. Is traded up at $150, 140 some odd bucks. Price falls out. Where's it going to go? When price breaks down and you break one level, you'll find the next, and it will find a place that it's been before. And do we all remember back in 2020 when oil was hit $20, right? And actually, you know, the wick goes negative, but that we're not talking about that. We're just talking about pure price, right? About $20. It was a number that I had, and I was laughed at, right? But why? Why did I pick that? Well, because all I'm doing is looking for areas that might come in line with that level. I'm looking for levels of, hey, where have I been before? Probably want to go back there. Something like in here. That's all we did. Yep. Okay, averaging, just averaging. There's some bottoms. And there's the bottom of these candles. That's around $20. Yeah, that works for me. Everyone thinks you're a crazy lunatic. But it's all you're doing is identifying where price has been in order to determine where it may go. That's all. Again, don't have to go to MIT. It's not that complicated. You just have to be able to understand and interpret what the market's telling us. Right? Like you look at the major markets today, this is the Dow, this is the weekly, so we want to switch to a daily, and the things have been bouncing around between red and green all day long. Maybe a little directionless. But we don't get lost in the thick of thin things. Here's what we know about this chart. We had sell signals up here. The job is to monetize the chart. That's what you're doing, right? Move down, retracement higher, move down, retracement higher, move down.
Sorry, when you say the Dow, you mean the Dow Jones,
yes.
US 30, yeah?
Yeah. This is DJI, but yeah, you could use that too, same thing.
Hang on, I'm gonna have to switch onto my phone because my laptop's bugging up.
So if we just have to do what the chart tells us, right? Told you to go long, so you go long. How long do you stay in the trade? Well, until the trade's invalidated. Would there be a crime taking money off anywhere up here? Not at all. It's totally logical. Right? Totally logical. YM is the contract for the Dow, and it shows the volume profile better. But where did you fail? Right at the point of control. Right? What are you susceptible to on the way down? That volume gap. So if you were trading futures, right, one of the things I would ask you to do is, okay, hey, let's look at this daily chart when you sit down at your desk. Maybe even the monthly, right? Just to have a real good understanding of the world that you're going to be trading in. So when you look at the weekly, you go, eesh, I'm trading up in that gray zone there, which means it's pretty light volume and things could happen quick both up and down. You need to be aware of that. A little bit of a slide down here. That's the upper value range. So you know you're at a premium and you got this big gap, and that's the point of control. You're assessing the risk. Constantly assessing the risk. So on the daily, you run the risk of falling in there. But when you're trading the shorter time frames, this is what you're looking at, right? Don't get married to the trade. So if you were fortunate enough to get in on that move, this is when you're really excited, because all of a sudden, you notice how you've taken out this high, right? So if most of you will see that and you're like, oh, that's awesome. You've taken out that high. And then at some point, the market tells you it's time to go the other way. Don't get married to, oh, I'm going to go on and make new highs and we're never going to see these numbers again. Don't let that happen. Follow the chart. This little retracement didn't break trend. And then boom, you get a big impulse higher sideways, and then you get your sell signal. I much prefer being able to read the ones that go sideways for a little bit, than the big impulses, because sometimes you just don't know where they start and stop until they're over. Right? So don't get married to the run. When the run's over, the run's over. If you're ahead early, which is our goal, you own the trade. Right? You're in the driver's seat. And your biggest stress should just be managing how much money you're going to make. Right? And there's lots of ways to do that. Let's say that this was your trade and you entered here. Right? You're going to want to put your stop in as quickly as you can to lock in anything that you can. And this is something that I've been doing myself more frequently. So here's what it is. When I open the trade, the intention is to get ahead early. Slide a stop in so that I'm profitable, or when I'm profitable. Even if it's skinny, I just don't want to lose anything. And because I typically am trying to swing trade, I'll run a trailer. And then eventually, let's say I'm short, and then eventually what will happen is as price falls, the trailer will also fall, because that's what it does. It follows it at whatever percentage or distance you set. When price moves a little bit higher after a fall, it stays where it is. But if it was to continue down, then it would again continue to follow. But eventually, that trailer, if things go your way, will sink past your original stop loss, which basically invalidates that stop loss. And then you're going to be safe. Right? You're not going to lose any money. You're just going to make more. And when price retraces, you're going to get knocked out of that trade without having to be there, and without having to be that one to pull the trigger yourself. And because you're going to set a target for that very same trade, one of three things, a couple things will happen. You're going to get stopped out on the trailer in profit, or you get taken out by your target that you set with more profit, or it's still open when you wake up, but you won't have lost money. But it's just another way to give you more control over managing that trade. Right? So we want to get you in the driver's seat at the right time. That's what this does for me. It gets me in at the right time without the danger. Right? Again, we don't know what's coming after these candles. Right? I want to be safe. The objective is to give you entries that are safe, profitable trades. That's what we're trying to do. There's another example of the point. You see what this represents, why does that happen? It happens because you have, I don't want to say parabolic, but you have this big impulsive move higher, right? Basically think of it as an elastic band, stretching that out. Then you have a big drop in price, pulling the elastic back the other way. It's essentially like a snap back down, but they are sharp, sudden changes in direction. That's what creates the points. And then, of course, boom, the downtrend continues until it's invalidated. And then you get a nice move higher. And it's just rinse, repeat. And every once in a while, you'll catch one of these. Now, this is on a 1 hour, and this is the first little invalidation or long signal that you got. And if we change to a 4, it doesn't even show up, I bet. Nope. But what is it showing us? This is a doji, right? This is often a reversal candle. So maybe what we saw, right, in this here, maybe is a reversal candle on the larger time frame. So far, we've just gone straight down and sideways back to these levels, like you've tested the T-line and pulled back right away. And so when you see this has no fight. That's what it feels like, right? It's just been capitulation and then flat. Not a lot of fight. Any fight you got was just a wick and it faded and still closed or is trading below the 5. You, you look at your stochastic RSI and it's been very oversold, but it's not getting to a level that kind of makes you think there's something up yet. It can be flat, flat, flat for a long time. Your Fisher is showing you a little something though, so maybe we move, but we'll let the chart tell us. Right? I don't want to have to guess here, and this is the point. If I'm waiting to go long, why would I take this trade? Anybody? Like if my objective, this is what I'm looking at, would I go long here?
If you were trained to lose, you would take that trade.
Yeah, you wouldn't take that trade to go long because it's trading below the moving averages, so it's not giving you a reason to go long. The downtrend is still
Exactly.
because I'm in that US 30 trade. I've been in it for the past couple of days now, trying to close up that gap.
Mm-hmm.
So nothing's told me to go long yet.
Yeah.
Everything is still, it's telling me we're still in a downtrend. So why are you gonna fight the trend?
That's right. And if we sat down at our desks and we said, okay, I'm going to trade the 4-hour. Like I'm going to be looking to be in this for several days. The 4 hours time frame that you can kind of make that happen. This is where I find people try and cheat. Right? They'll look at this base and they'll say, okay, that's a bottom. Now the next move is up. That's what happens, right? How many times have you done this, right? Oh, that's a base, boom, next move is up.
That falls into like trading how you feel, not what you see.
Yeah, and
If I see something like that, I'm gonna be honest. I'm gonna wait till that thing goes down a little bit more, meets another price point that it has a benchmark on, and really wait until that T line shows some kind of indication of a trend going back to the upside, and then trying to see what next target level it's looking for as far as the price.
yeah,
And if I get the indication that it's on a trend back up, then I might enter along, definitely.
because here's the other thing we have to be aware of, and this again, remember, this is the 4-hour. So this is really our first move down, right? Is it the first of several? We don't know. Just like we didn't know down here that it was going to be the first of several moves higher, we don't have any confirmation that this is not the first of another move down. We don't know that. But this is where people will make mistakes. I know this because they tell me, oh, you know what, it based out, and then I thought, oh, I'm going to try and get a jump on it early. That's the front running. We don't want to do that, right? We tell ourselves we're not going to front run. That's the front running, trying to cheat. If you were short up here, you're still short down here. You have no reason not to be. Nor do you have any reason to be trying to go long yet. This could actually turn out to be a staircase down, right? There's our staircase down. There's our base. Staircase down, maybe to here. There's your base. Staircase down. We don't know. Right? We just have to trade what's in front of us. Right now, on this 4-hour chart, you would have had a very clear sell signal at around 10 p.m. 6 or 10 p.m., whichever one you decided to take. The divergence was there. You broke the 20, so you know you're going to find the 50, which you do. You can't break the T-line. You fail harder. And not a lot of fight. Still trading below. This is all we do, and we just look for the levels, right? Trading at a premium. So, this has got to be a target on the 4 hour if you don't catch a bid. Right? So it's just...
That's the lower range value down there?
This is the upper, actually.
So
this,
the upper. Okay.
yeah, so this is the premium. Anything above it is a premium on that time frame.
All right.
And that's the upper value range. And you've got the 200 kind of hanging out in here trying to meet it. So these are draws for price. The point of control is a draw for price because so many other people have traded in that level and shaken hands. How many times have you seen this? And this is why, to the other side, that you have to also be careful. So here's your top, very clear reversal, right? But maybe you bounce here off the 20 because this is the first attempt, right? And then you double top this chart. And then we're having another conversation. Oh, what are we going to do? We got, is it double top going to fail or is it a breakout? There's a big difference between a double top and a breakout. Because here's what happens to everybody. Right? We make this move down.
Because that looks like it could break out, right?
Yeah,
once it bounces.
Yeah,
but
sure.
Then there's that risk, like
then
you said.
Then it does this. Now here everybody is saying, it's a double top, it's a double top, it's a double top. And then price goes like that. And then does another one of these. And then goes like that. Right? That's
right. Falls right back into that gap, right?
Correct.
Yeah. Oh, that never happens.
No.
Oh, yeah.
Yeah. So, we just don't know. But it's all we can do is just try and be as prepared as possible, both to the upside opportunity and the downside risk. Right? That's all we can do. Just do what the chart tells us. But we can't just assume that, okay, this is the first wave higher and that this retracement is going to be the mother of all failures, right? We just can't. We can't expect everything to be V reversals up and down. Right? This would be very organized and efficient, this move up, retracement, move up, and on the move up, what would happen? You'd be looking to take out this previous wave's high. And if it fails, you're looking to take out the previous wave's low. And that's where it gets scary on this move. Because that would bring you pretty far back, 38-ish. So the chart tells us it's bullish. Hasn't been invalidated yet. So we'll see what happens here. But all we're doing is assessing the opportunity and the risk. The downside risk we've talked about, the upside opportunity, you start taking out the previous wave's highs. And then eventually, if things go your way, if you're long, you're looking at these levels back here. That's your bullish thesis. The problem is, and for those that are actively trading, is that the market has become incredibly reactive to news, right? So, every day it's another press conference with more stuff being thrown out for people to digest, more than normal. And the market has just become simply reactive. At least the stock market has become simply reactive, in my mind, to everything that goes on in the day-to-day news cycle. And now it's gotten to the point where people are literally trying to front run the news. With what they think they read out of something or interpreted out of what was said. And it's just, there's not a lot of structure. It's not based on policy to any extent, right? It's just reactive. And it makes it very difficult. If you're trading in situations where you might be using leverage and you're susceptible to volatility, this is the kind of market that will chop people up and spit them out. up, down, up, down, up, down, stopped out, that type of stuff. And some of you may be feeling that.
Oh,
That's
yeah.
why we just
I think
follow the
I
chart.
think if I spent a week with Blunthouse, man, I'm not gonna lie, and he saw me trading, he would probably find a way to create an indicator based off of how I trade, and you'd be like, "You're a madman for it, but it works, right?"
Yeah,
But yeah, no, the leverage will definitely get you.
yeah.
Leverage will definitely get
It, it's and it's the type of habit that you don't want to get into, because you're gonna find that the time that you spend in front of your screen will be trying to make up losses or do things that are irrational because of the effects of using too much leverage. And it takes away your opportunity to actually learn, right? So that you can get better and increase the profitability the right way. Just don't be frustrated that it takes more than a day. That's all.
right.
Right.
Like that, and that's the main part, right? I guess I want to build the bag real quick, right? And it does get frustrating at times, but you gotta just realize that, well, motherfucker, this is what you signed up for. Don't cry about it.
Yeah.
Get in the next trade, right?
Yeah.
And if you gotta make it back, make it back. But there's definitely a price point where I want to reach as
Mm-hmm.
far as like holdings, where I could enter a longer trade that's like a day or two that makes sense with a lower leverage and things of that nature,
That's
right?
right. Yeah. And again, it doesn't matter what you're trading. The chart is interpreted the same way.
Right,
And this, what
right,
you're looking at, is an ETF. This is NAIL. It's the home builders and suppliers, and it's a leverage 3x bull. And why I'm showing it to you is because I tell you to be aware when you're trading well above the 20, the 50, and the 200 MAs. Because when you're trading above the 20, the 50, and 200, at some point in time, you're going to want to come back and test the 20. Here's the breakout. Here's the test. Right? Nothing goes straight up. It's not like you were never going to see the 20-day moving average again. Right? So here's your test, and you get some obvious support. Actually, between the 20 and the 50, for that matter. But the key thing is that you got your sell signal, and the chart told you that this was a downtrend, and it's gained momentum on the way down. And what was it looking for on the way down? So 20-day moving average, 50-day moving average, 20-day, that's the 200. That's thin blue line is the upper value range, and the red line is the point of control. Right? And I know this is repetitive, but it's repetitive for a reason. It doesn't matter, and there's a reason why I show so many different charts, because I want you to understand it doesn't matter what you're looking at. It doesn't matter the market, doesn't matter the asset, doesn't matter the time frame. Right? You break down, and what were you targeting? So you found your 20, you found your 50. You would have said, oh geez, probably going to look for the upper value range. I don't know why, because there's all this price here. That would make no sense that we come back to it, does it? Does that just make too much sense to you? Uh-oh. What are we doing? We're looking for previous wave's low. How many people bought into this? Oh, we're back. No, you're not. Because all that was happening on the weekly time frame is that you hit the 200, but this told a bigger story. And then you came back and you took out the previous wave's low, just like you took out this previous wave's low. And if we back up to where we are now,
damn, I could only imagine a 75x on little green candle right there. on that
Listen,
green arrow
this
to
stuff,
that red one. Good lord.
yeah, this is stuff that you guys can trade too, right? These types of ETFs. It doesn't have to be crypto. It's a way to get exposure. And some of these leverage things, listen, you can make money, but you can also lose it, right? There's pros and cons to everything. But as long as you're on the right side of these ETFs, the erosion and decay is not really too bad. As long as you're on the right side of it, the trade's going your way. But again, just for the emphasis of a chart, you're trading above the three major moving averages. You're going to at some point come back to tag it. You're just trying to find an opportunity to tell you maybe when that's going to be. Here it was. Up in here, you started to get the signals on your stochastic RSI, your Fisher, and then your MACD rolled as well. All confirming what turned out to be this big move down that's not done yet, and probably is looking to take out this, which is the point of control down here.
Pretty much. If you learn how to play tag with the moving day averages, right, and just realize that the price is always going to look back and forward to these prices, then you just learn how to play tag with those. You'll be able to do just fine trading, right?
That's right.
Whether it's up or down.
It's just like the chart is your treasure map. All you have to do is follow it, right? Treasure map said to go short. Okay, how long do I go short? Just follow the yellow brick road, man. Right? That's all you're doing. Just follow the path. Right? Just follow the path. Look at this. This is really getting bullsy here. That's Bitcoin on the weekly. It's obviously caught another bid.
And you know what? The moving averages, I've always like. Sorry, I was just saying Oh, sorry, whoever was talking, go ahead.
No, I think it was you.
Oh, sorry.
Yeah.
Yeah. Yeah, no, I was just saying, with moving averages, like, I think those are some of the best indicators when it comes to understanding just where the market's going. It's such a simple indicator. Just like my favorite one is the one that you taught me on my first session, that 1,000 moving average. Like that one has helped me. It's helped me hit so many like targets and have more confidence in my trades. Because like you said on the first session I was in, you said price likes to revisit the moving averages, whether it be the 2150, 200 or the 1,000.
That's right.
And yeah, so for example, with I'm on a gold trade and price is heading towards the 1,000 moving average, so that I can have an opportunity to go long. Same with the Dow Jones. Price reacted off on the 15-minute candle is just about to 15-minute time frame is just about to hit the 1,000. On the 1 hour, it did hit the 1,000, rejected off that, but it didn't close the gap. But on the 4 hour, it hasn't even touched that. So that's an opportunity right there to aim for that 1,000 moving average. So
Yeah.
pull back to the 4 hour, pull back to the 21 moving average, and then enjoy a nice run down to the 1,000 moving average, and then see how it reacts from there.
Yeah, and I think what it's there. There are going to be people, you'll run into people that say, oh, they don't mean anything. That's all bogus. Blah blah blah. What you should be looking for is this, and I find that incredibly ignorant, to be honest, because it tells me that you don't understand what a moving average represents, as simplistic as it is, right? It is a representation of time and price. That's important.
Yes, sir.
And price has a relationship with these levels, whether they be major moving averages, whether they be benches of past price, whether they be volume shelves. Price will move in and out of them and behave quite similarly time and time again. Like using this gold chart as an example, and we talk about trading above the three major moving averages. Well, here's your breakout, and here's your first test of the 20, and this really just turns out to be what I would call a continuation, right? Here you come back to it again, and you get more support. You come back to it again, you get more support. This area you can actually see that you're kind of double toppy, so that's kind of interesting, right? But eventually you break it. So remember, just like on the chart we showed where we had that move up and then retracement and move up, we just don't know if it's, a big move down or if it's just a small retracement in an uptrend, right? Well, that's what this was, right? Big move up, small retracements in a further uptrend, big move, you know what I mean? And then you go sideways, and at some point in time, you know that you're going to break the 20, and that's what you do. And when you break the 20, where did you come back to? The 50. You struck it twice. Get a bounce. Where do you bounce up to? The 20.
And you
We'll
get a
see if it
rejection
holds,
on the 20
right?
as well.
Yeah. This 31.39 level is a level that I had as a pullback level, and we hit it the other day. And basically all I was doing is just looking for some past price to see, hey, where might something want to sit? There. Nailed it. Right? Didn't say it was going to stay there forever, but I was going to tag it because it's looking for past price to validate itself. Oh yeah, I did the right thing, almost like a puppy.
And you know what? If you throw the Fibonacci on top of the moving average, you see that price rejected beautifully. So if you go into the 4-hour, draw your Fibonacci from sort of where it broke. So from
Down here.
20, yeah. So you've got like a nice leg up.
Yeah.
Nice, looking to come back to retest, giving you another opportunity to enter.
Mm-hmm. Yeah,
for you to continue going long, so you can layer up on your trades on.
That's right, and actually, this is a real, like we talked last time about how we can layer our tools, right? So this is a really good example of how I would be layering my tools, because I trade off three principles: filters, fibs, and fractals. So the filters are things like the Fisher transform. For me, that's why I like it. The script methodology is a filter for me, right? It filters out the BS from what I need to know. Where's price going? That's what I need to know. What direction? The fibs give me reversal, points.
Yeah.
Right.
Same.
So in the event of a pullback, probably be looking at 618. And when you look to the left of your chart, you'll be able to see why 618 becomes relevant, because you'll start to see past price from it again. Oh, where are we? Here we are, right? In order to figure out where price is going on the right side of the chart, we need to understand where it's been. Simply condensing your chart like this will help you validate what you already may believe to be true. Like, okay, this is looking like that's the extent of this move. Let's draw fibs on it. Completely rational. Right? Completely rational. You can assume that when you start to break down, that you have to come back and visit who? The 20. And that's what you're doing. You're trading above those three. So you're visiting the 20, not for the first time. So there is a chance that you could break it, but you can still expect some support there. Until the chart tells you no, like you're working under a sell signal, right? So this is a setup that I notice all the time, guys. Perfect example, you're too hot, you pull back to the 20, and you're thinking that, okay, this is the one that's going to break, and then the damn thing bounces off the 20 and double tops the chart. and then you have a whole new scenario to figure out. That happens. That happens a lot, right? Because then what you thought was a breakdown, like here's your move higher, small retracement, move higher, small retracement, move higher, small retracement. If you move higher and take out this high, then that's all. This wasn't the major breakdown that you thought it was, and all it was 3 red soldiers in an uptrend. Right? So this is one of those areas you got to be careful too, but the way that price behaves and where it may go, you're all over it now. Hey, if I don't get support from the 20, what am I looking at to the downside? There's the 200 and there's the 50. Right? Those become targets, and lo and behold, there's 618. Right? So that becomes the draw for price. The draw for price is the 200, the 50, and the 20. First touch, maybe you get some support. If it bounces, what's it going to want to do? It's going to want to test the previous highs. Take it out, you might be on a run. Fail, you're going to come back and visit this again, and then it's another attempt.
That's where patience comes into play as well.
Exactly.
Today, this morning, I was earlier, like you were talking about, being excited to get into a trade, and I didn't quite let the pattern play out. Now, earlier we were talking before the call started. I was telling you about my head and shoulders pattern, and so I saw I didn't let price play itself out properly this morning, which did take me out on a bit of a loss. So I was down by, and again, this is what I told you earlier about my psychology, where I need to just relax and let things play out, because I was down by 2%. But after I got home, price has already played out. It's formed like the right shoulder, the head, and then the left shoulder on the 1 hour time frame. And it's triggered me in, and I'm about to recover now on my 2% that I've lost. So because it was trading above the 21 on the 1 hour chart.
Okay.
It's trading above the 21 moving average. So literally how we drew that Fibonacci, and so I'm currently just shorting it just to the 618 level. So that's gonna, and then from there I've got a buy. Is it buy stop?
Yeah.
It triggers you in. But yeah, I've got a buy position with pending, basically at the 618 level. But if I was patient, I could have seen it like after the right shoulder formed the head, and then from it not breaking that level, I could have entered. Because you gave me like an engulfing candle, which was perfect, which I could have entered that.
This is like, it's one of those things where it's very easy to overanalyze a trade, right? Some of the best trades I think I make are the ones that I set up at night and then go to bed and wake up in the morning. And I think part of the reason is because I do everything I just told you, right? I try and get a good entry. I slip a stop in as quickly as I can to make sure that, it's essentially a disaster stop. If there was an impulse candle, I'd get washed out even, or with a little bit of profit anyways. Put a trailer in because I'm hoping to get a runner, right? And set a target, which will be, like if it was, let's say it was Solana 4 hour.
I like that Solana.
I know, that's why I brought it up, just for you. Like a hairball, right? No. But if if you're short, or you want to be short, what's your target on the 4 hour? It's, well, there's the 1000 MA actually. Here's your 20 and your 50, and the point of control is all in here. So if it was to fade, that would be a draw for price. Now we know that it brings us back to a shelf. So the question then becomes, once we get there, is it a situation where you find support at that shelf, or does that shelf become a slippery slope and you fall into the gap? And when you fall into the gap, or potentially fall into the gap, what would be a draw for price? the 200 MA on the 4 hour. Now, this is not going to happen in one day, right? This is a 4 hour chart, so there's several days involved here to make all these things materialize either up or down. As far as the chart itself is concerned, on the 4 hour, you got a very clear signal to go long, and it's been open ever since, right? But this is why, to your point about the 1000 MA, and when I first told people about that, the 1000 and the 500, they would like laugh, right? Well, nobody uses that. That doesn't mean anything. That's crazy. Well, what it is, more than anything else, is it is historical, right?
Yeah.
And if you're trading things that have lots of price history, like oil, it becomes really, really interesting on what these long-term averages tell us. I'm going to bring it to them, right? So
it works wonders on Forex, because Forex has got such a long
Yeah.
history.
Exactly.
I was talking to a trader, a friend of mine, and I told him about the 1000 moving average, and he was like, "Why do you use 1000?" And I said, "Hey man, my man Blunt, he told me about it, and obviously we know moving averages, price likes to come back to historical data, so when you throw in the 1000, it helps you hold trades for longer, so you get better risk to reward, and not just that, directional wise,
Yeah.
you know you're solid, because the 200, the 50, and the 21 get broken quite a lot, but that 1000, it helps you, it gives you that extra confidence to know that, okay, cool, we're
So,
definitely in this direction, or
you know,
this is where I need to aim.
it's funny what we learn, right, when we flip around at different charts. So this is a monthly chart for light crude oil futures. I usually chart US oil, right? Here you have the 500-day moving average at 46.50. Let's say $47 for just round numbers today. $47. Remember that number. What's down here? So 47 bucks is this in here. So I can see that it sits kind of between two levels that I've already set forth. But the important thing that I'm trying to show you is that on a weekly chart, right? On a weekly chart, this 1000 days isn't really 1000 days, right? It's more than that. And it gives you a clear indication of support, and when you break it, it's very difficult to gain it back again. And you'll notice that, where did it fade back to? See here? The 500 day. So when I had 61.66 as a number, I also knew that the 500 day was down here, and it made sense to me even then, because I thought it was something that it might want to tag. It tags it again here, again in here. It catches them both in here. This is back in 2021. Right? Back in here. Love this stuff. And then here's your 20 bucks.
So you use a 500 day as well?
Yeah. Yeah. The pink is 500. And listen, I didn't develop that. Like, it's not like I woke up one morning and said, "Hey, I'm going to use, these averages now." No, I was fortunate enough to have, a really good teacher and mentor, and he pulled me aside one afternoon and said, "Do you want to be the only person in the room not making a mistake one day?" And I was like, "Yeah, I want to be the only person in the room not making a mistake every day." But this is what he showed me, was the 1000 day and the 500 day, and explained that everything is fractal again, right? So one of the great things about this methodology is that you look at a 1000 day moving average on one time frame, but you look at it on another, like the 1000 day on the 15-minute, for example. And what you'll have by the time you have your full set loaded is you have ranges, right? You have, okay, I know that if I fail this level, I'm going to find the next level, which is here. It's going to be the first attempt, so it may bounce, and then I should look for the level I just broke as an upside target, right? Like, I didn't create all this stuff. It was taught to me. But he basically explained that these long-term averages represent history, right? And they typically line up with key points in time, especially the 1,000. This is the Dow, right, on a weekly chart. So this is 500 weekly, 1,000 weekly. So there's the monthly. I like looking at monthlies, and I'll show you why. These long-term averages don't really become relevant, obviously, but when you throw on the shorter ones, they sure as heck do. And if we throw in 100, you're going to know where it is, right in the middle here. So, you know, sometimes on the 15-minute chart, when price is broken out, all of your averages fan out like that. You see that all the time on the shorter time frames. Right? All the time. Well, the same thing happens on longer time frames because everything, again, is fractal. Go back to the nesting doll example. This is the Dow Jones monthly. It's a big doll. We open it up, there's a weekly doll inside. We open that up, there's a daily doll inside. What you see on one time frame, you'll see on another. So here we are, you know, getting support, getting support. You've tagged the 50-day moving average on the Dow monthly several times. You know, I would hate to come back and tag it again because, you know, this level in here, there's a lot of price here. That would be a draw for price. These benches would be a draw for price. If you were to break the 50, what would you be looking for? Just a next level down in the form of, that's 100 MA. And when you look to the left, it does kind of intercept some price. Not much on the monthly, obviously, but it does. So this is what sounds irrational. When you tell someone, no, that, you know, you go from this level, we're going to find 36.5 on the Dow. Now, if you said to anybody up here, this is why this conversation is meaningful. If you were to say to anyone you know up here, or even any market expert, would they be telling you that 36.5 was a possibility? No, not at all. Uh-oh, what the heck is that? Did current price just come back and revisit past? Oh my God. What do you know? Sounds crazy, but it's not. The crazy is denying that it happens.
Anything that can happen will
Right?
happen.
So this moving average is a representation of time and price. Right? It's relevant. When you have a bench of past price that happens to line up with a major moving average, in my book, that becomes a target or a potential touch, right? That's why when I have my trades open overnight, I might have a ridiculous sell level in there. Like maybe it's something I'm trying to short that's been overcooked and it's starting to roll over, like Layer did. Let's look at that actually. Because what I'm going to do is I'm going to set an exit so why this level here was my entry.
That's from the M-top pattern as well, because you got the left line.
Exactly.
Right. So that's a beautiful pattern right there.
So
you got multiple confluences as well.
But all I'm looking at, Mike, is okay. Here's a couple candles with two equal tops. Here's a couple candles with two equal tops. Right.
Price don't like to go high on that one.
Yeah, like nothing. You know, nothing psycho.
Yeah.
Right. That's all I'm looking at. Simple stuff.
And I think that's where people like get trading really wrong. Like they overcomplicate it when
Hmm.
if you follow just patterns and just simple things, like you simplify, if you take trading, just simplify,
Yeah,
strip all the bullshit away.
that's right.
Like you look up for simple patterns like M top W bottoms, they give you fantastic risk to rewards.
Yeah.
You just apply some moving averages, like they give you fantastic risk to rewards.
Hmm. Okay.
Yeah, it's trading is not actually really that complicated when you think
No,
about it.
I don't. I don't know if you guys can see this, but what we're seeing here is the 200-day moving average showing up now for the first time on Layer's 12-hour chart because it's a fairly new issue, right? So there's not a ton of trading history here.
Yeah.
But
Hmm.
there you go. That's relevant to me. I want to know where that is, right? That's what, the preparation's for. Oh, it just so happens that it's sitting literally right on top of the POC. Interesting.
That light blue is the 50-day, right?
Correct. Yeah. That's the 50. The purple is the 100, which I don't always have lit. But yeah, so that's what Layer did, right? And what all I was doing was literally just lining up these tops, right? I saw that was those four candles, that second top they lined up. So that for me is kind of a short. And that's what I did. And where did I put my sell order? Down at the 50. And I obviously got triggered. Did I look back and go, ah, shit, I should have held it? No. Right now I have 5 minutes of going, damn, that would have really worked out if but I don't know, 770 something percent's more than enough for me. Right? That's what it checked
Yeah,
out at.
it was definitely
You
a
need
nice
more.
trade,
More.
right? You should have, you should have re-entered 75x stick. Right.
The
See,
monster.
I would have
Just
as soon as I saw that second M, so you got the first
Yeah.
pullback, and then that second M, that neckline right there that forms the
Yeah.
sort of like the corner of the M. So from what I know from M top W bombs, that's the neckline. So it
Hmm.
entered from that neckline right there. So where you got them two easy tops or two easy bombs or them two, the red
Sure.
and green.
Yeah, yeah, yeah.
Yeah, exactly at that level is where I've had my entry for short. Stop loss just at the top,
Yeah.
and then yeah, I would have just enjoyed the ride.
Yeah. So this is the stuff that, as the more you do, the better you get.
Yeah,
Understanding that these major moving averages are representations of time and price, which is where buyers have and sellers have shaken hands together in the past. And quite
there's,
often,
there's like there's like literally a gold mine of information. It's astonishing for real, like for real, for real.
well,
Thank you, Blonde.
listen, you're very welcome. And what I'm doing gives me kind of an opportunity to talk about this. Is I've created a premium Blunhouse technical analysis room, and what I've set it up for is because I really like doing these sessions, but it's difficult to, let's say you had a trading issue that you wanted to talk about. It's very difficult to do that in here, right? But I've set up this room so that we do live work every morning and afternoon. They can be, you can ask those types of questions and then have the ability either later in the day or the next day for us to go over it again, right? And so that you can refine and start to really work on the things you want to work on. And then we can do live trading as well. That's the other thing we'll be doing is some live trading in that room. So it's
is
kind
it
of
on
a
Telegram?
one-on-one.
How'd you get onto this group?
I just decided to start it. I get a little bit frustrated, Mike, to be honest, with some of the information and narrative that's out there that everybody has to absorb. I experienced that as a younger person, and it polluted me, right, when I was first starting. That's why I'm such a hard ass about blocking out the noise, because that's the worst thing that we can absorb is all this other stuff. And the more we're absorbing all this other stuff that's not even actionable and tradable, it's valuable time that we're missing learning how to understand the language of the market and then use that understanding to monetize the chart. That wasn't happening anywhere. Like, again, the pontification stuff, right? Everyone talking about what they think might happen, but no one actually respecting the real truth, which is the price on the chart. Right? If you're not listening to price, if you're listening to people and not price, that's a problem. And I only listen to price, and that's what this room is for, to help people monetize the chart, and we'll, to get that one-on-one mentorship and support, and which helps build confidence, right? And that's what we'll be able to do in that room a little bit easier. Yeah, that's what I'm doing there. I'm doing it with one of my partners, Exchanges, and I'll be in there for several hours every day, doing just this, but more of a one-on-one kind of working session.
I would like to join the group, so if you just
sure, I'll
send me.
Yeah, absolutely.
Yeah,
I'll
send
send
me a
you the
link
deets,
or
Mike.
yeah. Because you know me, I'm hungry for knowledge, and I take everything that you teach me on board.
Listen, I appreciate that. That's a kind compliment, and listen, guys, I don't have any kids of my own. I never had a son or daughter that was interested in this stuff to teach it to. My nephew is, but I get a lot of enjoyment out of sharing this knowledge. I was fortunate enough to have it shared with me, and I've always been adamant about sharing it with other people. Like, someone cared enough to show me how not to get my neck cut off every time. Really simple.
Well,
and I really appreciate that. And I, trying to give a little bit of that back, and it's, and I like doing it, right? So I really enjoy doing this. So I appreciate the opportunity to do these sessions, and I appreciate the opportunity to talk to you guys. You keep me young. And, I like being able to share the war stories and the things not to do, so that you don't get too many bad habits, and you gain the confidence to understand that this is something that you can do, although other people may tell you that it's not possible, but yes, you can. So yeah, so if you want to join the new group, just reach out to me, and I'll give you the details. And yeah, I'm happy to kick that off. So, but
yeah, definitely, because the level of my trading's grown since joining your TA sessions. It's actually amazing, and I thank Robbie for introducing me to these sessions.
Thanks, Robbie.
He's working right now. I just messaged him going, "Hey man, where you at? You're missing valuable information." But it's like, yeah, I'm driving, I'm working. So I was like, fair enough. But yeah, it's definitely improved my trading.
Okay.
I know there's still aspects which I need to work on, which is more psychological, but in terms of TA,
yeah, well,
every session is helping.
I'm thrilled that you're getting so much out of it, because you guys do have the opportunity to change your lives, right? You can make a living doing this. You can subsidize your income doing this, and you don't need a financial background. It's not something that's a prerequisite. I don't have that. I have an interest in, am I business minded acumen? Yeah, sure. But I'm terrible at math, which is kind of ironic about this. Right?
Same here.
True story. I was in like some sort of genius English program, and then in remedial math. And my friends would say, "How can you be in like genius English in the afternoon, and like remedial math in the morning? Like, that doesn't even make sense." Right? But what does that tell you? So, later in life, I figured out what that was all about. But um, I think if you're the type of person who can visually learn and you learn quickly that way, this is perfect for people like that struggle with academics, but yet can read price on a chart like nobody's business.
And just to add on that, because I'm terrible with maths myself, and I go into trade. I'm 31 now, and I go into trading when I was about 18, 19, but I was still in my party phase. So it wasn't until a couple of years, or 3 years ago, when I seriously decided to get into it. And a lot of the courses I got into were overcomplicating it,
Mm-hmm.
and trading. It wasn't until I cut out so much of the noise and I just focused on the basics, like reading candlesticks,
Mm-hmm.
moving averages, and just patience, and just patience in terms of like, well, I mean, obviously patience in terms of how watching price move, but patience in terms of yourself
Yeah.
in terms of yourself, in terms of learning, and not chasing. The thing that I realized this year was, don't chase the money, just chase the skill.
Yes.
And
That will come in time, right?
yeah, the money comes in time. And furthermore, being in this sessions 2 days a week, I'm chasing the skill. I'm not chasing the money, and I'm seeing the money come in.
Yeah.
Like we spoke about this morning about me having an issue with this prop fund that I'm trading, about them with their stupid profit targets, and it's like, cool, no worries. Thanks to Blunt, I'm able to, instead of like my usual 2 to 1, I'm able to aim for my 5 to 1, 6 to 1s.
Yeah.
Um, because he's taught me something that has just leveled up my trading. So anybody listening, this guy's a genius, and this is coming from his newest nephew.
Well, thanks for that. Um, I have a friend of mine that I'm going to bring in to one of our sessions next week, and I consider this guy to be one of the better private traders that I know. And he'll be like, "Oh shucks, don't say that." But I do believe that he's really good. He's incredibly disciplined. He has a set of rules that he sticks by, and he has that that reactive, instinctive thing that we talked about, where if it doesn't feel right or doesn't smell right, you hit the kill button. Like, he's that disciplined. Doesn't matter if it runs after that or anything. Like, he's just disciplined. And he's a fantastic options trader, right? A fantastic options trader. And I'm going to bring him in one day next week. I'm not sure if it's going to be Tuesday or Thursday, but I'm going to try and bring him in next week. And you guys will really enjoy him. He's a real good guy, down to earth. And, he's, again, not a person who has a background in finance, right? That's not him. He's just like you and I, and has taken this seriously, and makes a more than a good living doing it, right? And I think he'd be great. And that the reason I'm bringing him in is because I want to give you guys exposure to people like that. Just aside from myself, like I love doing this, but I think it's valuable if you can get the perspectives of people like this gentleman, and like David Nikoski, who you've probably heard on Twitter, and Carpathia, and I'm going to have the two of them in, by the way, together in the next week or so, maybe next week if I can arrange it. And those two gentlemen have been in the space, right? Have lived through the things that most of you haven't experienced yet, even maybe me. And what's interesting, Mike, about what you said is that you're 31 years old, and you're exactly the kind of person in the age group that I want to try and reach. Because when you were in 2008, you were just a young teenager.
I was having the time of my life, drinking, partying, and just not focusing on that. Do you know what I mean? Money wasn't even. It was like, just get it and spend
You didn't
it.
even think about it, right? Nobody
No, you don't.
at that age was thinking about what maybe their family was experiencing because of what was going on in some cases. So the point is that that generation has grown up with the understanding that QE is normal. Cheap interest rates are normal. Cleaning up spilt milk is normal. Things only go up is normal. Bad things can't happen is normal. And all of that is wrong. And there is an entire generation of consumers, business leaders, and policymakers that have never lived in a positive interest rate environment and have never lived in what we would consider an unsupported economic environment. In other words, they've always had the Fed at their back to clean up the spilt milk. There's an entire generation who has no clue what that reality is like, through no fault of their own. And these are the people that are particularly susceptible to the BS narratives that we hear. If you can't read price on a chart, you're doubly blind. You haven't lived in a real world yet, not your fault. And no one's taught you that price speaks truth and people speak BS. And that's what I'm trying to give you an opportunity to learn, is how to read the price on a chart. And no one's going to take it away from you. You know, it's not like I'm going to recall the knowledge in a day. You'll have this stuff forever. And, you know, one day you're going to go, you know what? No, someone didn't take advantage of me, or I didn't take advantage of, or the market didn't take advantage of me because I had the knowledge. The chart told me something that I didn't maybe understand, but I understand that the market knows more than me, that the money in the market knows more than I do. And that's what I want you to be able to take away, that you don't have to be a victim. There are things that you can do to protect yourself, and the biggest one is just learning how to read price on a chart.
And I fully agree with that, because so many of my family, like, so I'm Kenyan, and a lot of my family members have, I've only got like a few from my mom's side that are into banking, and they've made a decent living. But majority of them, they're on, like, they have this version of reality, which is the rat race. And whenever they see me on the charts looking at the market, they're like, Mike, be realistic. Trading isn't going to pay you. Like, you've been on it since you were like 19, you've been interested, but we haven't seen no results. And it's like, guys, this isn't a sprint. Like, between 19 and to where I'm at right now, I was too busy partying, having a good time, but I've matured and I understand the value of them. I've always known, but right now it's like where I'm going serious. And if you look at the 2 to 3 years I've taken it seriously, I've gone from pretty much a novice to, because even back then I was still very scared, because I didn't really understand the market, because I didn't really have, access to information like that. Yeah. But when you look at how far trading knowledge has come, there's a lot of bullshit out there, but there's a lot of like simplicity out there. And I think with everybody, over time, you become better. But the thing is, you have to, if you're hungry for knowledge, and this is one thing I just wanted to point out in the group chat, like in the sessions, because obviously it's just me, King, or Mikey, or FEG to retire. Like, we're just asking questions. Like, if you want to, and I don't know, to me, like, if I was a trainer, don't know about you, Blood, but if nobody's asking questions, I'm thinking, like, are people listening? Are they learning, or what? So I just want to say, if you want to learn, if you want to progress in this, you've got to ask questions in this chat. You've got to be humble and just be like, yo, I don't understand what this means. Can you tell me? And that's how you grow as a trader. And give yourself time. This isn't something that's, even though it's an infinite income, your first 5 to 10 years, you're gonna go through ups and downs. I'm 3 years in, like full on, and I can't tell you how much money I've lost in it. But the knowledge of the wealth of knowledge I've gained in it is unfathomed. Nobody can take that away from me.
Yeah. No, that's
And
absolutely true. Think of the first few
yeah,
years as a bit of a paid education, right? If you can make a little
100%.
money.
Yeah, that money that you're gonna spend on a night out getting wasted
Yeah. But
is money that you spend on.
uh,
Do you know what I mean? That time you're gonna go out and get drunk with your friends. It's time that you've just gained knowledge that's gonna pay you 10 times fold and leave generational wealth.
yeah,
Or
to your point,
or you might get wasted on the chart, but
yeah,
But the payout
well,
is better than that terrible
but you're gonna
hangover.
learn. But you're gonna learn, right?
yeah. So the premium room that I was speaking about, what I've done is I've taken all the videos work that I've done, and I've actually uploaded them online to a cloud service. And the people in that room, I will give access to a folder that will have all of those videos, like all of them that I've done, so you can go back and at any time in one kind of depository go back and look at those videos. So it's really there's some
Well,
huge
Blunt, you're not
history
gonna be
everybody.
there, man.
Yeah. What I wanted to show you on this 12-hour chart
One.
is something that we look at all the time. So here's price kind of pulling back, right? We're thinking, okay, is this the pullback? And what it ends up being, remember we talked about the 20-day giving you a little bit of support and then you double top? An example of how that happens, right? This is the first pullback that's testing the 20. It's kind of in that first most territory. I always am very careful trying to short these first attempts to the 20 because I find they often bounce. So I'm usually really careful when I take those ones. And
That's where patience comes into play, isn't it?
absolutely, and to be perfectly honest, you don't want to short into support, right? Nor do you want to long into resistance as a rule. So that's why, as an example, when I tell you that I like to buy off the 50, like I didn't realize that the 50 was going to be down here, but here it is. This is why I like to buy off the 50. I want a candle on the north side of the 50 like this. I look for those. Doesn't matter the time frame.
Yeah, I like those. I like those a lot.
Yeah. So, but yeah, so that's kind of what's going on. The new room is like I literally just set it up, but it's ready to go. In the main Blunt House chat, I think in the pinned messages there's a bulletin that talks about it, or I think there's a post on Twitter too, I believe. But yeah, so that's what we hold next week. We're gonna hopefully have Ken and Dave back, and those two guys are absolutely brilliant, and the opportunity to spend time with them is invaluable. And our friend Troy too. I hope to have him next week, and I think you'll really enjoy him.
We love it when you bring these guests, man, because they bring knowledge.
Yeah,
This is our trading knowledge.
absolutely. And you know what?
Fast forward 5 years from now, I'll be the one that you'll be like, yeah, we're gonna have Magic coming in with his intake.
When those gentlemen are in a space on Twitter or anywhere else, people are dying to talk to them, and you just really can't, right? You just don't get an opportunity. They're coming in here. Bring your questions, right? You may never get another opportunity to speak to people like this in this kind of an intimate environment. And they loved being here, by the way, both of them. So they're eager to come back.
We love to have you guys in here, man. My bad, King Cooper, and thank you, King, too, for putting this together, bro.
Absolutely.
Like I know you silent, but you know.
King's writing notes, man. King is there just writing notes, man. Don't sleep on
Legendary.
King, man.
Yeah, thanks to
I've been trading.
listen, the FEG team was my first contact with the crypto world when the pandemic was on. Right? Like literally it was the guys on the FEG Telegram in here that walked me through how to open up and create a digital wallet. I didn't even know what a digital wallet was. Right? So, you know, we've known each other for a long time, and I'm glad King reached out after a while and kind of brought this back probably better than before, really. So kudos to him.
I want to get more into the crypto wallet as well because King, I'm gonna hit you up later to talk about helping me out open up a crypto wallet because the conversion rate from dollar to pounds is killing my payouts. Like I'm losing money on conversion rates, man. But Rob was telling me if you put in a crypto wallet, you're not losing as much.
Well, you always got to off ramp it somehow, but yeah, we could definitely chat because XPX.
Yeah, we will chat. We will chat over the next coming weeks about getting me into a crypto wallet. I've actually got a payout. I should have a payout coming in mid-June. So yeah, before that payout, I'm gonna hit you up and we're gonna talk about that.
Awesome.
Hey, good job, bro.
Well, listen, guys. If there isn't anything else for today, I do have to jump out. We've been in here a while today, but
I do have one question.
You bet.
I know we looked at Solana real quick.
Mm-hmm.
I'm trying to enter a trade right now at about 176. All right. I just need to make sure it's a good entry here.
What's your leverage?
Don't worry about the leverage, man. Don't worry about that. Yo, I gotta to make sure I got a place to stay every day.
Wait, is on Solana is the ticker for that SOL USD on TradingView?
Yeah.
What's Solana's ticker?
Yeah.
SOL.
SOL. Just SOL.
USD. SOL USD. Yeah.
Oh, okay, cool. Yeah, I'm on the right one. So where are you looking to enter? 170.
176.
What time frame?
Honestly, probably in the 15-minute to like hour.
Okay.
But it might take a little longer to develop. It might be by like midnight tonight.
This thing has still got a bit of gas in the tank to run a little higher, maybe.
Yeah,
I'm looking at 176 as just like a quick touch point, and then I put like a take profit at around 205.
So you're looking to long it down there. So basically, on the 1 hour, you're hoping that it comes back to the 20, which, if you look at that time frame, is the bottoms of the two candles to the left, the bottom of the wick of the second candle over, and it cuts through the tops of the other candles to the left. That's, so what you just described on that time frame, if you're looking at your screen, because we're still live, you've got your move here off the 20, right? And what you're talking about is a retracement to that level. And what you want to be certain of is that it's a first touch bounce off this 1 hour chart. That's what if it fails,
like a bounce up.
Yeah. If it fails, you're going to come back to the upper value range in the 50.
Right.
Okay.
Right. I'll be liquidated by then.
Yeah, I was gonna say because I'm looking at it. I was on the same page as Blunt. Because it looks like it's forming like M top
Little bit, yeah.
pattern for it to pull back to. Sorry, Blunt. What's your blue line again?
The 50. Yeah.
50. Yeah.
That's the 50.
Yeah, that's the 50. So yeah. This is me personally. But it doesn't always go like to the. But yeah, I'll probably be. Yeah, I'd say it's forming sort of. But we don't know. We have to see how it reacts. But yeah, I'd say like it might pull back to the 50 because the 50 is always a much better touch for it to give you sort of like more.
A lot of trading that'll go on between now and the 50, right? So
Yeah.
I think
Then when you go into the daily, you've got like a tweezer top that formed at 184 and is currently just rejecting one. Well, it's hitting the 200 on the 181 level.
It's basically on the
So
upside, looking to take out the previous wave's high,
yeah.
which is in a gap to get there. So the chances of
Mm,
doing it are pretty good.
yeah. So would it be better to say in this instance, just wait for that to play out?
Probably.
There's
Yeah.
that type of trade right there to make you feel alive again, right? You
Yeah. Yeah.
know. But yeah,
Because
I
me,
have it exited at 205, man. It could dive to like 155. I'm not gonna lie. You know, I know that risk,
You,
but yeah, even down to like 140.
yeah,
you guys
I'd
have
say
the
about
ability
like,
though to set your targets, right? You know how to do that.
yeah.
But
See, this is why I love a trading community, man.
yeah, well, we can do that. Like I said, we can do this in the premium room twice a day. So, but I do have to run. Excuse me. I just wanted to thank you guys for coming in. If you don't have your excuse me, your BYDFi account or BidFi, however you want to say it, jump on that. The link is in my YouTube description, so all that stuff's in there. So I will check you guys next week, and we're gonna have some special guests too, so it should be fun.
Appreciate it,
All right,
Blunt.
thanks, guys.
Thank
You're
you
awesome.
very much, Blunt. Another great trading session.
Yeah,
Appreciate you,
that's it.
bro.
Thanks. You guys make it possible. Remember that. We'll talk to you soon.
Don't forget to add me on that private. Yeah, because Mike's hungry.
Okay. All right, guys. Take care.
Have a good time.